Okay, hello, good morning, everybody. So, welcome everyone to the final round of Olympus, the Boardroom Simulation Challenge, organized by OJAS 14. Crowned as the country's seventh biggest B-School fest, OJAS is the flagship management festival of SPJ Institute of Management and Research. With participation of over 100 plus B schools and undergraduate colleges across the country, the fest in its previous edition has seen massive participation of over 9,000 students registering across 25 events across all domains. This year, even though it was virtual, it was about making it bigger and better. From the despair of a disconnected, illusionary world, we've come together in a post pandemic reality with a promise of change and hope. So, about Olympus, a little bit about Olympus. Olympus is a boardroom challenge, testing how the candidates handle high-stake business situations. It tests their knack for, deciphering people, situations, and complexities of everyday life. So, after an event spanning two rounds, the first one being a quiz and the second being a case presentation submission, we're finally left with our six national finalists. I'll now be introducing our esteemed judges. So I think, Rishabh, are you going to be putting them on spotlight? Right. So we have Mr. Kapoor with us. So Mr. Kapoor too is an alumni of SCJMR. He graduated in 2018 and has worked with PCG as a consultant for 3.5 years. And he is now a senior strategy consultant at Siemens Advanta Consulting. Uh, so, Mr. Kapoor, if you'd like to say something.
Thank you, guys. Glad to be here. Glad to be being or contributing to the fest. I was one helping at a given point in time. So good to be back, and I wish all the very best to the teams over here.
Our next judge, Mr. Sanjay Kumar, is an alumni from SPJMR and he graduated in 2004. So Mr. Kumar's illustrious career has, seen him have a 15 plus years experience in the finance and investment banking industry. So he's worked for firms like ICICI, Edelweiss, Yes Bank, and he currently leads the investment banking section for SBI Capital Markets. A hearty welcome to you, Mr. Kumar. If you'd like to say something.
Great to be here and looking forward to the event and all the best to the participants. I'm looking forward to the event really. Thank you so much.
Yeah.
So thank you, judges, for those encouraging words. And I think that's what exactly our participants needed today. So I'm sure that all the finalists are now ready to present the solutions to our esteemed judges. With that, I would like to close the inaugural phase of the final round of Olympus and let us begin with the presentations. So I would request everyone to listen to the rules carefully. So each team will present their pitch in 3 minutes and all the other teams have to listen to it carefully. At the end of the pitch, 3 other teams will be given the opportunity to ask the presenting team a question. The time limit for the same is 2 minutes per questioning team. Note that the question asked by other teams will be evaluated as well. The teams asking the questions will be notified before the start of the presentation, and each team presenting is expected to finish in time, as violating it will attract penalties. So if you're facing any technical issues, inform us immediately over the chat. So we are good to go now, and all the best to everyone. So we will start with the final round of Olympus case pitch with the team. So with the team Sagacity. So I request the team Sagacity to raise their hands.
Hi, Saksham. In the order, I think it was first this Team Rising Saviors. Can you just check?
Yeah, sorry, Team Sagacity is the next in line. Apologies. So Team Rising Saviors is the first one to present, and Team Sagacity is the first one to ask them question. Then Team Intrepids for question number 2, and Team Techions for question number 3. So I request Team Rising Saviors to raise their hands.
Thank you, Saksham. So I'll be representing Team Rising Saviors. So shall I continue along with my pitch?
Yes. So we will start with the timekeeping. Sure, you can start with the pitch.
So yeah, thank you. Indigo as an airline has high operational synergy, financial synergy, as well as high network effects. It has been able to maintain a very high on-ground efficiency with a turnaround time of 20 minutes and operates on the sale and leaseback model. Indigo goes after a 6-year sale and leaseback agreements for its planes. It also has a no-frills mode of operations where there are no paid-for onboard meals, only a single flying class, and no expensive lounges at airports either, further reducing costs. We felt that India's main goal should be to create extraordinary availability for India from little urban communities to the nations around us. Growth and expansion are crucial for Indigo in the future. Indigo needs to have a four-corner strategy from where one point a passenger can go to any place within 6 hours, and the airline should also plan on reaching small towns, small cities, and other remote locations where the flight connectivity is almost non-existent, and even other international destinations that it has never flown to. In deepening regional connectivity, it will help to promote trade and commerce while offering support in realizing the vision of Indigo to expand their regional footprint. Indigo should also adopt the digitization of air operations. Digitization and integration of all ticketing technologies to enable a one-ticket solution for multimodal journeys is the plan for the next 2-3 years. With the integration of blockchain in the airline value chain to ticketing journey of the customers, there can be high efficiency as well as high customer data security. As a very long-term goal, sufficient research and development also needs to go into enabling large-scale unmanned aircraft system traffic management operations. Computer vision and artificial intelligence technologies could be adopted in making this possible. This brings to a conclusion of our vision and business plan for the Indigo for the next 5 years. Thank you so much.
That was great. I will now request the teams who are supposed to be asking questions to start asking your questions. You have one question per team. Team Sagacity, please shoot.
Hi Anish. Great pitch. Just wanted to ask you about the blockchain part. So you mentioned about blockchain in airline value chain. So can you please elaborate on how Indigo will leverage blockchain in their operations?
So if you consider any airlines right now, almost 60% of their operational cost comes from airline fuel. And these airline fuels are sourced from multiple companies, and they're also brought on contracts of futures and forwards, wherein they're trying to kind of predict what the price for the fuel will be in the future, and they're writing the contracts. So blockchain technologies could be used to enable to make sure that there's a system of including all the stakeholders, right from the companies which are providing the airline fuel to places where the fuel is transported to it coming into the airport, into their maintenance department, and getting into the airlines as an end step. So the entire value chain of getting the airline fuel, which we thought is a very variable or a very finicky form of investment or form of cost expenditure. If you're able to track the entire value chain of how the airline fuel comes from the manufacturers and ends up inside the airline, we will be able to kind of predict the price in a better way. So the entire value chain that I was talking about includes coming the manufacturers to the transporters and finally getting into the airlines. So blockchain could also make sure that there's high security, in the sense that no one is able to modify or play around with the prices of these airline fuels, which could really impact the profit line of our company. I hope I was able to answer your question with what I had in mind.
Yes, thanks a lot. Yeah.
Okay. Okay, that was great. The Intrepids, would you like to go next?
Sure. So hi Anish, that's a great pitch. So my question is, you are talking about computer vision and AI enablement in your ticketing journey. So don't you think airports are already doing that? A lot of Indian airports are also doing this thing, like people they are using facial recognition technology to onboard passengers onto the airplane. So how do you think Indigo will fit into this? And the second question which I have is, what are the destinations you are planning to planning to travel using Indigo? So, I mean, what would be your go-to destinations abroad, like you said?
So right now, as far as Indigo is concerned, of course, computer vision and artificial intelligence technologies are being included in multiple airlines, but not to the extent which we want. For example, if I'm trying to book a ticket to our journey from, say, Cochin to Mumbai, I will have to go through the traditional way of checking in through web, getting the airline ticket from the counter, going and standing through multiple queues, which might not be a good option in the post-pandemic world. So even though we are talking about artificial intelligence and computer vision as far as airlines are concerned, we have not really implemented it to a very regional scale. I mean to say that there is not much penetration as far as these technologies are concerned, which impacts our daily journeys. So if Indigo is able to put in investment in such a way that we're able to see these changes taking place even for a normal customer who's booking, a regional journey, I feel that, that is the future vision that I was talking about. And also, as far as the nations to which that the Indigo should expand its connectivity is concerned, I feel that a lot of right now Indigo is maintaining its operations to the the popularly travel countries, for example, Paris, Germany, Paris, Boston, and some of the places where international journeys happen on a regular basis. But then in the post-pandemic world, we should also consider the option of connectivity in terms of connecting not only the popularly traveled to countries, but also the countries that are not traveled to at all, because that's where the potential lies. They should be able to use technologies in predicting which kind of countries will travel open up to and the demand will open up to. For example, there are countries wherein a lot of interest has come in the form of the next FIFA event happening or the next sporting event happening. So if the airlines is able to kind of predict the customer travel, which could be in line for these countries and maintain its airline traffic in a similar way, I think the airline will put itself in a better position for predicting the future demand.
I would have just one question. So you are saying that Indigo is flying to destinations like Boston and Paris, but Indigo is actually using mostly a low-cost carrier model. So do you think traveling for 10-15 hours in an airplane which has a low-cost carrier model where you don't get a lot of amenities which we get in a business class, would people actually buy tickets in that case? Would people want to travel in such a class to such distances?
So while the main USP of airlines of Indigo is its low-cost carrier model, wherein it's just focusing on the regional connectivity, I feel that in the future, international travel will also become cheap. I mean, of course, right now, international travel is looked upon as an option which is very expensive. But then in the future, we are predicting airline fuel price to go down with better technologies and better ways of better e-fuels coming up, e-fuel options coming up. So international travel, there will be a point wherein international travel is as cheap as what we are looking at for regional travel right now. And if they have to leverage this kind of demand that could shoot up in the future for international travel as well, I think it's better that they start planning out, at least at this point.
Okay, Anish, thank you. Thanks for the answers.
Right. I'll also be putting up a prompt when your time is up, or rather when you have 30 seconds to go, right? On chat. Next, we have Team Tachyon. So if you guys have a question, please shoot.
Yeah, nice piece, Anish. So as you stated that aviation fuel cost approximately 40%, 40 to 60% of its operational cost. So what are your views on sustainable aviation fuel?
I did research on this topic to see how we could reduce. I mean, are you talking about sustainable fuels?
Yeah, sustainable aviation fuel.
Okay. my awareness on this topic would be limited, but as far as coming from the topics that I've read or the research articles that I've read, it is still at a very nascent stage. The adoption of e-fuels inside airlines is still at a very nascent stage, and there are a few companies who are actively working towards this technology, and this definitely seems to be in the future, because right now I don't think we have the necessary capability to say that we have something like how we have electric vehicles coming up for the land transport. I don't think we can say at this point that e-fuels will be coming up very soon. But then, of course, sufficient R&D has been going into it. I feel I'm not very much aware of this topic, so I would refrain from commenting on it any further.
Yeah, thank you.
All right. So that concludes our first pitch and the round of questions. So thank you so much, Team Rising Saviors, for that. So now I would like to request Team Sagacity to raise their hands. Great. So you can start with your pitch, guys, whenever you're ready.
All right, guys. Good morning. So Indian aviation space, being a difficult battleground, had witnessed fall of many giants in the last decade. Yet through series of innovative approaches, Indigo has captured themselves as a leader in the dominating space. They positioned themselves as a low-cost, no-frills airlines connecting all over India. Their key differentiation points have been they have standardized their aircrafts and increased labor utilization through single aircraft types. They have been purchasing Airbus A320s and have been following economies of scales by placing bulk order, implying a huge potential for discounts and cost savings. They do so by sales and leaseback model, wherein they sign an aircraft purchase agreement. They sell it to leasing companies, they cash margins onto it and lease back the same aircraft for 5 to 8 years. Their maintenance costs are also low, and these have been pushed down to the companies they lease their aircrafts from. Their route planning and aircraft utilization have been really, really effective. They do it through hub and spoke model. They follow no frills model, which essentially means there's no business class, and for the ancillary service you have to pay extra, which reduces the maintenance cost. Their fuel cost is also low through engine optimization and softwares. Certain identified problems were less differentiation in the market, which makes their innovations very short-lived. Their untapped domestic cargo market, there's a lack of product depth and breadth due to the standardization. There's no focus on business class. They also have limited routes than their competitors, and they have limited presence in the international markets. My friend Gitika would take over from here on.
Thank you, Ayush. Giving a few stats about Indigo. Indigo is the only airline which has been consistently making profits over the last 1 decade, while its competitors were facing heavy losses. As my teammate Ayush stated, that's only because of the USP which they follow of low fare, on time, and courteous and hassle-free travel. Talking about the future prospects and opportunities available to Indigo, we believe that Indigo is already in talks and already in plans of adding to their aircraft fleet, given given the new initiative taken by government of Udan, and also as per the stats, the air passenger traffic is expected to double by 2030 owing to urbanization. Secondly, Indigo has just started with its cargo line of business, which is very untapped by Indigo. Although it holds around 53% market share in air travel, it is also expecting to make huge revenue by its cargo line of business, specifically for agri-produce. Thirdly, we feel that it can also increase its international reach in the Asia market, which is for small sector travel in countries like Dubai, Singapore, etc., because no Indian airline holds a dominant position, and that could be a game-changing proposition for Indigo. Thank you.
So thank you, Team Sagacity. Also, just a point of caution, I would request all the participants to turn their videos on unless absolutely necessary. So now we would like to start with the questioning round. So Team Intrepid, you can go with the questions first.
As so I have one doubt. So actually you told that the most of the time they are using SBL model. So as much as I've heard, like they are around 30% of the revenue they are generating from SBL. So how are you concluding that SBL model will help them generating more revenue in next 5 years?
By SBL model, you mean the sales and leaseback model, right?
Yeah.
Okay, so sales and leaseback model is, so ideally what happened during COVID was that these companies, the aircraft manufacturers such as Airbus and Boeing, they suffered huge losses because everything was standstill and the airports also closed, and their sales were going low. So even if you know about Akasa also, it is a startup airline that is being backed by Rakesh Jhunjhunwala. So in their model also, they have bought certain number of aircrafts at a very low cost, because they were able to lower cost, because it was a time where these companies were not able to sell, right? So in that sense, Indigo has been profitable for over the years, and they have a good cash position as well. So ideally they can buy these aircraft and then lease it back, use the sales and lease back model to get the depreciation benefits also, like just expense it, and uh, I think they will be able to sell it at a higher rate and buy at a lower rate because they are buying at bulk. So basically, they can do that due to COVID.
And just to add on to Saurabh's point, in the sales and leaseback model, it is not only generating revenue in terms of margins for Indigo, it is also reducing direct costs for Indigo in terms of lower maintenance and repair costs and reduced tax liability, which is going to be profitable in the long run, just because they are not purchasing aircrafts and incurring that much of capex.
So since the inception of the Indigo, they are using SBL model. So what do you think that will be different in this time after pandemic? Because they are using SBL model from the start only. So do you think that this strategy will work for them? Like there is nothing new about it.
Yeah, so I think they will be able to purchase more number of aircrafts, and obviously they need to increase their fleet also. So definitely they will be able to do it at a very low cost right now, because these companies are selling at the cheaper prices. That is why.
Thank you.
Thank you, Team Intrepid. So I request teams to limit their questions to only one question. And so Team Tachyons, you are up for questioning now.
So good pitch, team. So what we wanted to ask was that given that so many low-cost carriers are present in the market now, so how will Indigo tackle it, especially in terms of international travel, where like only Air India and Vistara are there who offer long-haul flights, and Indigo is generally restricted to short-haul flights. So how can Indigo expand to the long-haul market also?
So
Well, if you look at the cash, yes,
sure,
you may go, Gitika. You may go. Gitika.
So Team Tachyons, our proposition is that today, currently, there is no Indian domestic airline which holds a dominant position in the international travel. Even if you see Air India and Vistara, although they are operational in international travel, they don't hold a dominant position. So for Indigo, because its focus and its USP is cost-efficient travel, instead of long-haul flights of 12 plus hours, it can first try and target Asian country travel, where it can provide cost efficient travel in the countries of Singapore, Dubai, Malaysia, etc. And that's basically which could change Indigo's business model as well.
All right. Thank you, teams, for that. So, Team Vans Club, you are up next for questioning.
Sure. Thank you so much, team, for this presentation. So I'd like to ask one question. This is regarding your recommendation with respect to innovation. So you're talking about that Indigo can bring innovation by introducing business class and also introducing those high class, you can say, the tech innovations and everything. But I think that would impede what is kind of the motto of Indigo, because Indigo generally operates with again a no frills model, and they expect the kind of flexibility and lower cost because of that only. So how would you counter that?
I understand standardization is essential part for Indigo and it totally makes sense. But while not targeting those kind of candidates or those kind of customer base, they are losing on a chunk of revenue we are talking about over here. So essentially building certain amount of ancillary service and building a complete consumer experience for the customers which are in the upper middle segment and the rich segment of the economy, they might be able to cash in raising profits. And not even that, while taking into aircrafts, we are not just talking about just getting into the aircraft and going from point A to B. We are also talking about different checkpoints, which relates to even deboarding the plane and even getting onto the plane. Experience essentially counts all of that. So in that sense, we are talking about targeting those customers by providing them something extra, which might be lucrative for them.
Oh, thank you, teams, for that. So with this, we now wrap up with our second presentation. And now I would like to request the third team, Intrepids, to raise their hands for the presentations. Team Sagacity, you can lower down your hand, please. Thank you. So you can start with your presentation. All the best.
Thank you. Okay. So talking about Indigo, it is a market leader in the current Indian aviation industry. The market share of around 50%. It has also the highest load factor, which was around 74% in August 21, compared to its competitors, which was around 20.3%. Also, its success is due to its low-cost operation, and its low-cost operation is due to the use of models like sales and leaseback model and hub and spoke models. However, going forward, it faces certain challenges of maintaining its market share and also sustaining its increase in profits that it has enjoyed since 2010. So for that, we are recommending some propositions to the board. Himanshu?
Yeah, so thanks, Kapil. So first solution, as we are seeing demand is going to rise in future. In 2022, the total demand for domestic departure seats in Indian LCC has reached to 360 million. With current fleet capacity, which is about 90 million, Indigo cannot cope up with demand variability. With 550 Airbus, still Indigo is the major player, but there is an evident gap between the demand and supply. And Indigo can take leverage by capturing more DDS space. We suggest that it should focus on fleet replacement rather than fleet expansion. It will have two benefits. First, operating costs will not affect its strong cash flow. Also, it will help growing them sustainably. Second is international flights are made up of about 25% of Indigo's operation before the pandemic struck, after rising from 15% a few years earlier. And international share of operation will settle at about 40% within 4 years. So Indigo has a great opportunity in international aviation markets of short ranges. Most of the airlines are struck with the pandemic heavily, so Indigo can take advantage by initiating short range flights starting from India. Over to you, Saurabh.
So the next recommendation which we have is to make the sale leaseback model more efficient. For SLB transactions to be profitable, the aircraft cost, that is the underlying asset cost, has to be very competitive. Further, liquidity in the aircraft needs to be very strong. This in turn is driven by the supply and demand and the ability of the lessors to place the aircraft with a number of airlines during the life of the aircraft. So Indigo can leverage both these aspects as a core element of its fleet strategy. The massive order volumes which it has can enable it to acquire aircraft at very competitive cost. The next is Indigo's position in the market. So Indigo is a bona fide juggernaut in the Indian airline industry, and they will enjoy its first mover advantage and the high market share in the LCC space. However, the growing footprint of Tata Group in the airline industry could make it a more effective competitor, thereby acquiring around 40% of market share. And particularly, it could potentially cover a wider swath of the market. So even so, it is likely that Indigo will possess more of a threat to Tata's plans than the reverse happening. Thank you. That's our pitch.
Thank you, Team Intrepids. So, Team Tachyons, you are up for questioning.
Great pitch, Team Intrepid. So you can you already stated that we can see growing demand and there is a evident gap between supply and demand. So what are your recommendation in given sales leaseback model? Can you just throw some light on it?
Sure, Team Tachyon. So, firstly, in sale leaseback model, like we said, that the main efficiency of this model comes if the underlying asset cost, as the aircraft cost, is profitable. So, if we see that Lenovo has an order book of around more than 550 Airbus 320 Neos and A321 Neos, and now purchasing aircrafts in this bulk amount actually enables Indigo to buy it at a lower cost. Now, if they can buy it at a lower cost, they can sell it at a much higher profit. So that is how they can increase their margin of profit and their revenue from sale leaseback model, which is currently at 20% of their entire revenue, to around 25% in the next 3 years. So that is how we are planning to take it forward from.
Okay, thank you.
Team Vans Club, you're up for questioning.
Sure. Thank you so much, team, for the presentation. So I'd like to ask questions with respect to the international expansion of Indigo. So you talked about international expansion that currently it is within 25% right now for Indigo. So like if you basically are targeting international markets, there is Air India, which is currently being owned by Tata. And I think they already have so many contracts with international airports. And given the power of Tata, the negotiation power has also increased. And we also have some international airlines too. So like, how would you be able to compete with those kind of airlines?
Okay, so I would like to answer this. So basically, we are not focusing on international market right now. We are just suggesting that because most of the airlines in the world, they are heavily struck with the pandemic. So right now, this is like kind of opportunity because Indigo's cash flow is strong, and they can leverage that by acquiring more space into those short ranges flights. So like we are already purchasing around 102 A3XLR. So we can make a short range flight, just like we can go for just like Dubai, Oman, and East Asia. So also we can go for those markets. So, and we are recommending that because our share is around 25% from the international markets. So we can increase it to around 30 to 35%. But most of the focus will be on the domestic market.
Yeah, also to add on to that, actually our competition won't be with Indigo in the international because will not be going head to head. The Air India would be focusing on long haul flights. Let's say from here, from India, from Delhi to Paris, from Delhi to London. But ours will not be that. Ours will be limited to 6 and 7 hour flights nearby, as was mentioned by Himanshu. So we'll also not be directly competing with Air India in the 3 to 4 years going ahead. That's it. I hope that answers.
Thank you. Thank you, teams. Team Strategy Smoops, you are up for questioning.
Oh, yes. Oh, great pitch management. But with all due respect, we were somehow like the delivery was a bit too fast, so we were not able to capture all the thoughts in the next steps. Could you please tell us 3 simple action points which Indigo is planning in the near future as their quick wins? That is with maximum benefit with minimal disruption.
Okay, I'll take that answer. I'll take that question. So first is the short haul international flights, which Kapil mentioned, to places like Singapore, Dubai, Thailand. So those we will increase the frequency of flights to these locations and gain more market share from there. And these are destinations which even LCC passengers would prefer to travel to. The next would be the higher efficiency of the sale leaseback model. Like I said, about we have around 500 plus aircrafts in our order book. So naturally, we are acquiring them at lower cost and we can gain efficiency from there. And third is, if you look at the market of India, so right now, Air India has around 20% market share, Air Asia around 7%, and Vistara has around another 7%. So if you look, it's roughly 37 to 38% market share for Tata, and we have around 50% market share. So we'll focus on giving ultra competitive prices using our LCC model to gain further market share from 50% to say around 55%, 60%. And eat away into Tata's share from say Air Asia or say we say Air India Express, which are LCCs for them as well.
All right, thank you.
Thank you, teams. With that, we wrap up our third pitch of the day. And now I would like to request Team Tachyons to raise their hands. All right. So you can start with your pitch, guys. All the best.
We Team Takeons from NMIMS are going to talk about the long-term business plan of one of the low-cost carriers in India, that is Indigo. So Indigo is the market leader in Indian aviation industry with market share of approximately 54% as of November 2021. We have seen a few aviation industries such as increasing working population and wider middle class demography, which are projected to drive demand. Also, infrastructure build-up at leading airports and supportive policy framework has been giving a positive push to the aviation sector. Speaking of few challenges, so we have identified two key challenges that Indigo is currently facing. Firstly, there is a threat to LCC model because of variety of reasons such as shortage of skilled manpower in the industry, rising fuel cost, exchange rate volatility, competition from multiple low-cost carriers like AirAsia, demand forecast uncertainty due to changing customer behavior, and many more. Secondly, there is a low investment in cargo business segment as well as in international flights.
So now talking about, based on a recommendation, I will talk about the implementation for the next 5 years. So on the international front, Indigo's revenue from operations comprised of 25% from international flights. And now the management wants to increase it to 40% in the next 4 years. So based on this, we recommend that Indigo should tap into markets, attractive markets within a 7-hour flight radius from its 4 main Indian hubs. And also many destinations currently served by these one-stop options from India can be converted to direct flights and premium can be charged on it. Indigo will benefit from a robust inbound tourism such as medical and educational by opening new routes to untapped markets like that of Indo-African corridors. So we can manage travel itineraries using AI technology by offering personalized suggestions on hotels, unique tours, activities, and events during the travel date based on customer profile. This will increase customer engagement and brand loyalty. We can develop a system that will allow for in-flight internet browsing comparable to broadband speeds based on different needs like messaging, web browsing, and streaming films. The attention available in-flight is a perfect opportunity for an entertainment provider to offer a sample to new customers. So this would be one of the new sources of revenue for Indigo. We should form alliances with e-commerce giants, pharmaceutical manufacturers, and floricultural companies to capitalize on their expanding need for time-sensitive services, as well as we can invest in temperature-controlled cold storage compartments. We can invest in passenger airlines that can be used for cargo operation, providing agile way for adjusting supply capacity that would avoid the risk of fixed cost and production setup. We can invest in MRO facilities in India by introducing clauses in the RFPs linked to domestic capacity development and particularly for engine and component repair to lower the dollar cost dependence on MROs. So these are the recommendations from our side. Now we are open to questions.
Thank you, Team Tachyons. Team Vans Club, you're up for questioning.
Thank you so much, team, for the presentation. So I'd like to ask a question with respect to the additional services which you are recommending for Indigo with respect to the e-commerce and how they would be tapping in the the immediate services. So like how flexible it would be for Indigo given their costs and their no frills model.
So one thing is that Indigo is mainly a passenger airline, so it would mainly concentrate on domestic passenger travel. Additionally, if they have constant line of aircrafts ordered, so in case there is a demand fluctuation, in order to maintain a constant demand, what they can do is that they can tie up with these e-commerce giants and pharmaceutical companies. So there will be a constant cargo demand. So this will help to develop the cargo market. If there's a constant demand, they can order a dedicated fleet for freighters that would be wide bodied. Generally, Indigo operates on a narrow bodied planes, and that is for aircrafts. That is for passenger aircraft. So we recommend that in order to develop this cargo market, they need to have alliances like these.
Thank you, teams. Team Strategies Moves, you are up for questioning.
Thank you. Thank you so much, management, for that wonderful pitch. So you mentioned something about using AI to give personalized recommendations to inbound tourist passengers, right? But then that is going to involve a lot of data handling and also privacy issues coming up from different countries, especially the Indo-African citizens. So how do you plan to tackle that? Hello, was I audible?
Uh, so you are talking about data privacy. So generally also all kinds of businesses are leveraging the data from the customers in order to provide better services. So these will not be intrusive. So obviously we will collect only those data that is generally collected from the passengers. Just that we already have the timing and places of travel of passengers. So this will help to provide a geospatial recommendation, like wherever the passenger is traveling. So in case like a passenger is traveling for business purposes, so he has time to spare. So what we will do is only we'll push notifications on emails saying that these events and these activities may be of interest to you, and then we will just recommend that you can try. But we will not be forcing the customers to take bundles of packages based on these. So there will be only an option, and this will be available on their travel booking sites also, so that customers can conveniently plan their travel.
All right, thank you.
Yeah.
So can I go with my question?
Yeah, sure. Team Rising Saviors.
So good pitch, team. So you guys talked about how Indigo should convert their one-stop flight journeys to direct flights. So what major impediment do you envision will make this process difficult to implement?
So one-stop journeys. So basically, it is that there are leisure travelers and there are business travelers. So the business travelers are the ones who need the time-critical service. Like they will be needing that they can get to their destination quickly. But in case of leisure travelers, which is the major segment and which will be growing at a faster rate than the business travelers, so they would be in needing cheaper, price sensitive. There will be a price sensitive market, and they will be needing those services which are price sensitive, and they would like to forego the time also. So in that case, that will be an impediment for Indigo to have these one-stop direct flights instead of one-stop flights.
Thank you so much. But can you comment on anything from an operational standpoint, from the flight's perspective?
If you see, Anish, that Indigo is using narrow-bodied airplanes which can cater only 6 to 7 hours flight, whereas if you see Air India, Air Asia, they have wide-bodied aircraft. So these wide-body aircraft can go longer miles as compared to narrow-body aircraft. So Indigo itself, yeah, it has many A320 neos. So basically, without adding any further cost in their balance sheet, they can use these models like short narrow-bodied aircraft, and they can cater to 6 to 7 hour radius destination in their go. So if you see from the operational point of view, Indigo doesn't have to invest in wide-bodied aircraft as compared to Air India and Air Asia. So this will also reduce the operational cost, and it will also improve the margin and capex.
Thank you so much.
Your time is up. All right. Thank you, teams, for the pitch. So with this, we wrap up our fourth pitch of the day. And now I would like to request Team Vans Club to come up next. Team Vans Club, you can raise your hands.
Sure. So shall I start?
Just a second. Team Tachyons, you can lower down your hand, please. Thank you. Yes, please start it. All the best.
Thank you. So we are from Team Vans Club, and I'd like to start first of all by introducing the aviation industry in a short. So basically, aviation industry, the market size is of 680 aircrafts, and there are 153 airports right now in India. Apart from that, there are some government initiatives which are being taken with respect to the sector, like 100% FDI for greenfield projects, URAN scheme, and open sky policy. And there are some latest industry trends also. So like there is this privatization of Air India right now, the entry of Akasa, the Go First IPO right now, which was very successful. And we have also seen this surge in the fuel prices as of now because of the turmoil in the Middle East and so on. And so these are some of the factors which are right now governing the industry. If I talk about our case and about the Indigo, so the key differentiation and the problems which we identified were that currently the Indigo is using a single aircraft type. So there is this fewer maintenance staff and standardization in the process. Then they are also reducing their maintenance cost because of this. So it is like 3% compared with 8 to 12% of its peers. Talking about the business model, it's no frills model again. So like there's no clear differentiation with respect to their services. It's a standard model, and there is, because of this, there is no maintenance expenses. Then there are fuel costs. So 45% of the fuel cost are basically governing the Indigo Airlines, and since it's little less compared to other airlines, because of which there is this load reduction. And then there is this SLB model, which is the sales and leaseback model, where they have signed an aircraft purchase agreement and sell it to the leasing companies. And if I talk about their problems, so again, it's less differentiation when we talk about comparing this Indigo Airlines with other airlines in this sector itself. And then there is untapped domestic cargo market. So right now they are only focusing on the passenger market. There is also lack of product depth and breadth, and there is no focus on the business class. And there is limited presence in the international market. So our risk mitigation plan actually incorporates these things. And first of all, I'd like to recommend that India's air passenger traffic, since it's being double by 2030, so we should be focusing on new domestic airports being tackled and new lines to be captured. And then second of all, I would like to recommend that in existing airports, there is this free capacity also. So Indigo should increase their time slots, and cater to more customers rather than the fixed time slots which they have as of now. For the fuel price surge, they could go for hedging, like commodity hedging, and they can mitigate that kind of a risk. If I talk about their international reach, again, going for the international reach, it would be competitive. The market is very really competitive, but I think this is again an option right now. So yeah, thank you so much.
Thank you, team. Team strategist moves, you are up for questioning.
Yeah, thank you for the recommendations, management. So what we wanted to essentially know was that you're planning to foray into the international market, but again, the limited international airport slots are already being taken up by the bigger giants. So how do you plan on increasing or negotiating such airport slots with, let's say, the authorities or the individual airports in India?
Yeah, thank you so much for this question, team. So first of all, if we talk about how to compete with the other competitors in the market with respect to the slots, again, Air India is there, which is like the biggest, you can say, the aircraft carrier. I mean, in India, which is competing with respect to the international slots. And how to negotiate is, first of all, like obviously the company is trying to reduce its cost right now, so they can try to initially go for this model of going big on purchasing these slots, negotiating big. And because of that, there can be some hamper on the balance sheet in the shorter run, but in the longer run, this would pay off with respect to if we, let's say, get those slots and cater to those international customers. So first of all, not going small on this negotiation but going big, this would, I think, play. And second thing would be to go for, other kind of small acquisition. So like you have already talked about, like there is this Akasha Airlines also, which is coming up in India right now. So we can try to, merge, these kind of operations and try to get, those kind of increase, you can say the service power, because of which we can get those, international slots to cover. So yeah.
Yeah, thanks.
Thank you, teams. Team Rising Saviors, you're up for questioning.
Hello, team. Good pitch. So you guys talked about how Indigo should also venture into the air cargo market. So do you guys have any idea on what should be the split be between cargo flights and passenger flights, so as to leverage both the business models in a balanced manner?
Sure, team. Thank you so much. So I feel that, if let's say Indigo comes into the air cargo market, so I think the split should be 30-70 or 80-20 as of now. Again, Indigo doesn't have any kind of expertise in this field. So in the starting, obviously, the percentage should be low. And also it is competing with other, brands in the market. Now, also, since, this cargo market is a little bit, you can say, more profit giving, or maybe it is more profitable, it can be more profitable because of, the margins it can save and, the volumes it has. So if let's say they are coming up with a 2080 or a 3070 model too, then it won't be a big problem for them, and they would be able to capture good, you can say, profits because of this. Yeah.
Thank you.
Thank you, teams. Team Sagacity, you are up now.
Yeah, hi Vaibhav. So good pitch, but I don't know if it is a coincidence or not, but it had an uncanny resemblance with our PPD structure and the exact points that we raised. And I don't know, the stats were also the same, and the flow was also the same. But yeah, okay. So moving on. Akasa and Air India are threatening the cost leadership model and imitating their touted model with the experience and leverage of Junjunwala definitely and the Tata ecosystem. So how do you think that Indigo will be able to survive in the market long term, given that the companies are able to imitate their exact business model?
Sure. First of all, like to say that, obviously there can be some similarities given the fact that we are all researching on this one industry and there are similar industry reports. So maybe like there could be some uncanny resemblance, but apart from that, there's no as such, any other issue if you are thinking of that. So yeah, first, so starting with, your question itself. So yeah, right now Akasha is coming, and it has been backed by Rakesh Junjunwala. Now, the thing is that, Indigo is already is a big existing player in the market, and it doesn't really, it basically has, good leverage on, the kind of contracts it has, various airports and, the slots which it has, as well as, the kind of, the customers it's dealing in. Now, talking about, if Akasha comes in and, how competitive how competitive the market would be. So even there is this, Jet Airways, which is trying to recover, and it's trying to, get, the time slots in the market. And even they are facing this issue of, not getting enough time slots because of, Indigo operating, major time slots. And then there is Air India, and then there are other airlines also operating in the market. So it's not like that, with Akasha, the time slots would be an issue per se. Now talking about, the price competition, again, yes, Akasha coming in, they would be burning a lot of money. There would be, discounts being given on the website and all. In that case, the major differentiator would be because, the service and, how timely you deliver that service. So, the first of all, the customization, as well as, what is the, again, Indigo is known for its, timely arrival and timely departure. So again, that would be the mood for Indigo to compare, to compete with Akasha.
Thank you, teams, for that. So with that, we round up our last pitch, second last pitch of the day, and would like to invite Strategy Smoops to deliver their pitch.
So, respected board members, for the management team at Indigo, the challenge isn't merely to respond to industry's current operating environment. It is to anticipate what is coming in the future. So, giving a quick EIC, economic industry company overview. So we saw a negative GDP growth rate of 88% primarily due to COVID, 73% year-on-year decline in domestic and international air travel. And from the company perspective, we saw 64% dip in financial year 21, dip in the bottom line. But on the brighter side, India is set to surpass UK to become the third largest aviation market by 2024. And we believe the business and leisure travel will boost the growth. So respected members, for our inroads to the future, we have identified three key trends that we believe that will reshape our industry. First is the customer centricity, wherein the customer experience at most airlines lags the digital factor. And let's say the other airlines interactions with the customers are traditionally focused on just the booking reference numbers that contain essential data about individual flights. In the future, we wish to build that single coordinated view of the customer across all systems and touch points. And we expect to change the degree of personalization and the customer centricity offered by any other airlines. Over the next 3 years, our airline will continue to develop the ability to deploy advanced analytics at scales, because we believe increased use of data science and advanced analytics will reinforce the traditional sources of advantage to deliver us that substantial performance improvement. On the third front, there is a shift towards air freight demand for commercial air travel, and which we, as per number, which we saw a CAGR of witnessing a CAGR of 85% plus in especially the APAC regions. So on a short-term perspective, we are set to observe an oversupply in the passenger air travel and an undersupply in the air freight travel, which is where we want to capitalize and take that early mover advantage to establish our sustainable competitive edge over our Indian peers. Handing over.
Yeah, so moving forward, again, there are we divide our problems and our issues at hand into three major buckets. First being the strategic and business issues, right? Maybe international focus that we plan to expand, but in the short run, we recommend to put it on hold at least till we are back to profitability, till the international curbs are lifted and the global aviation industry is back to where it belongs, right? The second that we're going to talk about is the fleet and the technical issues that Indigo has been facing, specifically with the Airbus A320neo aircraft, and also the climbing procedure that we follow. So basically, if we are going for the high thrust model that we have been traditionally following, we want to shift to the newer technology of low thrust, that is A, going to decrease our fuel dependence and fuel costs, and B, going to instill that confidence that our engines and our planes are perfectly safe, and we provide in-class experience to our customers. And the third is definitely the external environment issues that we've been extensively talking about, COVID and the pandemic and everything. And obviously that is to a point beyond our control, and what we need to do right now is weather the storm in the short run, and in the long run look at four major pillars that is going to drive our profitability and our growth. First being the geopolitics, second being the technological focus, third being the privacy of our and handling of data, and the fourth being sustainability. Thank you.
Good pitch, team. So I'll go along with my question. So again, you guys emphasized on Indigo having to go into the air cargo market. So being a new player in such an industry model, name two challenges. Could you think of two challenges that you might face on an initial level that Indigo might face if you're venturing into an unexplored market?
Right. Thank you, board member, for that wonderful question. So what we want to recommend here is following the SpiceJet strategy. We know that SpiceJet is much better at cargo handling than passenger handling, and we are the vice versa. So what we want to see here is adopt the best practices from SpiceJet. And in terms of challenges, right, the first is definitely the heavy loading and the structure of our aircrafts. Be it better doors, be it more secure latches, or specifically trained pilots who are and manpower who are equipped and capable of flying the different types of aircraft through, let's say, major hubs and obviously in the major time slots that we're looking forward to.
Yeah. And the second challenge which we are already exploring is the supply chain integration. We believe, though there will be a lot of synergies when it comes to passenger and air freight, but since we have to carve, let's say, altogether a different vertical, so supply chain challenges is also which we are looking in a short term that might pose a challenge, but we are continuously working in that area.
Thank you.
Thank you, teams. Team Sagacity, you're up for questioning.
Yes. So given the rising geopolitical tension in Russia and Ukraine and rising fuel prices of the crude oil, how do you think Indigo is going to be impacted by it? And how can they ensure least impact on their business operations?
Definitely.
And
I can take that up. So
Please.
we all know that Indigo is comparatively better in terms of fuel costs as a percentage of total revenue compared to our peers. Right? That's A. Secondly, we recommend the using of new technology, which is the low thrust climbing technology. That is again very fuel efficient while takeoffs. So all these little practices that are within our control, we need to implement it very proactively so that our fuel dependence comes down. That's A. B, in terms of geopolitics, international relations, and crude oil prices, we do have little control over it, but there has to be a constant team that we are deploying for boundary spanning, and we are getting into forward contracts. We are getting into agreements with our suppliers to make sure that we are well shielded on the forex and the international fluctuations part.
Yeah. Further, we have also established a dedicated R&D team which is exploring on alternate avenues for fuels in the form of, let's say, exploiting airline fuels from LPGs, or let's say we are exploring that substitute mode of fuel. So we are very much confident within like 2-3 years down the line, we'll be able to reduce our dependency on the countries which we are dependent on, for which constitute 68% of our OPEX right now.
thank you very much.
So just a minor follow-up question here, just a minor. Is there any risk related to operations that you feel it will take when you are using, efficient fuel technology or something like that? Are there any key risks, like suppose while landing something happened because we are, taking these fuel efficient practices? So do you have any comment regarding that?
Yeah, definitely. So again, if these fuel efficient practices are in the mode of development, there are risks coming up. Our team has been highlighting risks and they are trying to figure out a way around it. Even in terms of takeoff and landing, it requires a lot of fuel and and in terms of heavy loading also, the amount of cargo or the amount of weight that we can carry with these kind of fuels. But yes, we are continuously improving on it. And as and soon the technology develops and we get more visibility on it, we'll take a call.
And we would like to rest assure our stakeholders that Indigo will never trade off, let's say, efficiency with the risk. Unless our team is like 100%, 100% be assured of the technology or the newer adoption of alternate fuels, then only we'll foray into the same into our operations.
This helps. Thank you.
Thank you, teams. Please note that restrict your questioning to one question per team. And Team Intrepid, you are up for questioning.
Yeah, so you talk about generating revenue from cargo operations. So far as we know, currently Indigo's revenue is around 65% from ticket bookings, both national and international. So I want to ask, what is the current revenue of Indigo from cargo operations, and what do you propose in the future that it will be increasing from this to this? So if you could give a figure or percentage approximately that you feel from your recommendations, you could do this.
Yeah. So we believe the ballpark percentage is somewhere around 10 to 15% bracket, which can also be looked up in the publicly available financial statements. At the same time, we believe ourselves to be a passenger air travel company. We want to maintain our core competency. It's just that we are just looking for avenues to diversify our current risk, which pandemic has also taught us. Like, we don't want to concentrate on our absolute risk to passenger air travel. So that's why we are looking for avenues to further diversify. But all like to be things to be made very clear that we are a passenger travel company. We wish to establish our core competency, and we intend to remain the market leader in our passenger air travel itself.
Just to summarize it, passenger travel will be our primary engine, and we are looking at cargo as our secondary engine in the next 10 years.
Okay, thank you.
All right. So we're officially done with all the pitches and the questions. So that was a great one set of pitches. Now, before we, send the judges to the breakout room to discuss their marking, what we decided was that we'd give you all instructions for round 2, so that the teams also can be put into different breakout rooms to, discuss their strategy for the upcoming round. So I'll just give you a brief about what happens next, right? So the next round is a boardroom challenge. So what happens here is one member from each team will come forward as the chairman or the representative. So we'll have 6 representatives and these 6 representatives will have a 12-minute discussion on a given business problem statement related to the airline industry. And you'll all have to arrive at a common conclusion, or maybe stick to your stance at the end of it. So this round is aimed at finding a multifaceted chairman, someone who's decisive, who can engage for impact, who can adapt proactively and deliver reliably, right? Saksham will now be giving you the problem statement. Following this, you will all be put into breakout rooms to discuss your strategy, and one member from each team will be driving the discussion, right?
Thank you, Simran. So now I'll be sharing the problem statement with you all, and you're requested to listen to it carefully. The problem statement will be repeated twice for everyone before we proceed ahead. So last week, Indigo released a better than expected Q3 earnings report. Also, as the third wave recedes, air travel is picking up and COVID curbs are being relaxed. However, in the first trading session of the day, the stock price has tanked by over 25% today. So this boardroom meeting has been called to deliberate upon the possible consequences of the same and prepare a response plan. So I'll repeat the problem statement now again. So last week, Indigo released a better than expected Q3 earnings report. Also, as the third wave recedes, air travel is picking up and the COVID curbs are being relaxed. However, in the first trading session of the day, the stock price has tanked by over 25% today. This meeting has been called upon to deliberate the possible consequences and prepare a response plan for this. Thank you, team.
So now we'll be moving you on to your different breakout rooms for 6 minutes, and the judges also will be moving to their breakout room. At the end of this, once you all come back, we'll start the GD, and the judges can then also ask questions based on your responses during the discussion. Okay. Another instruction is that following the discussion, each team representative will have 1 minute for closing remarks. Okay. All the best.
जजेस के साथ कोई गया है?
यार एक दिन जजेस के चले आओ। और ये भाई क्या बोल रही हैं लोग? सक्षम
एक सेकंड, is it still live on YouTube?
Yes, live.
Okay.
okay, let's.
Yep.
Nick, can you assign me to the judges breakout room?
Yes, I'll do that.
Guys, we'll be sending you back to your breakout room to another 5 minutes while the judges finish their process. They're taking some time. So you guys can still have some more time for discussion. Okay. Okay, so welcome back, everybody. We hope you guys had a good time to discuss. So, once again, I'll be reiterating all the rules. So, one member from each team will come forward as the representative. Six representatives will have 12 minutes to discuss the problem statement. Each team representative will be given 1 minute each for his or her closing remarks at the end of it. And this will be followed by a Q&A from the judges. So Saksham will go over the problem statement once more, and then we'll start the timer for the discussion.
Thank you, everyone. So I request teams to confirm. Their presence by raising their hands once, so that we ensure that everybody has joined back in.
Now, if only the representatives would raise their hands for each team. Right.
Thank you. Thank you, guys. You can lower down your hands. So now I will say the problem statement again. So last week, Indigo released a better than expected Q3 earnings report. Also, as the third wave recedes, air travel is picking up and COVID curbs are relaxed. However, in the first trading session of the day, the stock price has tanked by over 25% today. This meeting has been called to deliberate upon the possible consequences of the same and prepare a response plan for the same. Now I would like to request one team member to raise their hand and you guys can proceed with the discussion.
Good morning, everyone. So I would like to start off this boardroom discussion with our problem statement. So today our stock price has tanked by 25%, even though we had a better than expected Q3 earning report. So there are some of the reasons which I can think of right now. Firstly, as we know, the stock prices are dependent on perception and trust of the investors. So if we look right now, we see that even though the third wave of COVID has receded, right now the industry is not pretty much sure that COVID has actually gone away. So this probably has led to investors not being confident of investing in our stocks. And the second one which I can think of is the acquisition of Air India by Tata and the probable Akasa Air coming up in the next few years. So this has also deterred retail investors from investing in our stock and move through something like a Tata Sons, probably because till date we had our major competitor as SpiceJet, which has around 14% of market share, but with consolidation of Air India, Tata will have around 37% of market share compared to our 50%. So these two I can think of as the major reasons why we are losing market share, why we are losing, why stock price is tanking.
And just to add on to my fellow board member here, I would like to again delve the discussion into two parts. So internal factors and external factors. If you look internals, our fundamentals are strong, our Q3 earnings are strong. The only thing that we can probably solve for is the debt equity ratio. We've been raising a lot of debt. The equity ratio is through the roof at 38%, at 38, right? So that is something that we can assure our stakeholders that we're going to pay off that debt and we are going to remain liquid. That's A on the internal side. And on the external side, we see this global trend where FPIs are pulling out of aviation markets, even in the US. So that is probably a trickle down effect in the Indian markets as well. The variability in the stock, in the beta of aviation has been increasing over the past 2 years, right? So obviously investors associate a lot more risk with our stocks, but what I propose here as a potential solution is also a press release or some sort of a statement, some sort of a communication to our stakeholders to make sure we communicate that we are super strong and what are our plans for the near term, at least in the short and medium run.
First, I want to understand that, like, since we have discussed many of the things like the problem, but the real problem is like it has given that it is better than expected earnings, but it is not actually given clear that whether it has been attained to the pre-COVID levels. Since the COVID wave is also declining, since they are able to have the same utilization rate as before, that is led to the main market sentiment. Because also one of the 50% market share is with the Indigo, but how much they are able to capitalize with that market share? Are they able to get to the pre-COVID levels? I don't think so, because the utilization rate is very less still now, and still they are not able to get the pre-COVID levels. And also the tourism industry, one of the booster for the airlines, it's not also the up to the mark. And apart from that, the government measures which were for the infusion of liquidity as well as the incentives for private public private partnership has not been gone in a way positive for the Indigo platform. And apart from that, mainly there was still the restrictions on the international and domestic flight on the amount of capacity they have to utilize. So these are very many factors. There are still open up points. So still the investors are not happy like how
I actually
they are
agree
going to
with
capitalize on that.
Siddhant.
For me, the required solution which I can.
Yeah, Geetika, you can go ahead. I think there's a lag.
Yeah, so I agree with Siddhant's point. I think the first and foremost thing which we need to do is release a press statement assuring our audience, stakeholders, and the customers that there's nothing to worry about, and the fluctuation in stock market is short-lived owing to external factors like the geopolitical tension going on in Russia and Ukraine, because of which the fuel prices and crude oil prices are skyrocketing. But we can definitely assure them that that is not going to impact Indigo as a company, because even when we compare it with the competitors, although competitors on an average have around 45 to 50% of their total revenue owing to fuel cost, we as a company have only around 33 to 35%. So this would not impact our revenue generation capacity and profit maximization capacity. That's point number one. Secondly, we also have internal changes going on with the new CEO and chairperson coming on board, which is going to help us further strengthen our management and our value proposition.
So I would like to
continuing.
agree with you, Geetika, on one point that these factors are not going to affect us, but there is something regarding the high debt ratio. So in the airline industry, companies generally have a high debt ratio because, as we know, credit is very much required here in this industry. Now, talking of what we can do to strengthen our perception in the stock markets, we could do fleet expansion by dry leasing of aircrafts. Why I'm saying this is because we have a very strong cash flow. So our cash flow is very strong and we can afford that, which our competitors in India may not be able to do so. So dry leasing of aircrafts can actually increase our efficiency. And secondly, in the last 5 years, we have reduced emissions by 16% by using more fuel efficient engines. This has actually reduced our fuel cost, and our rise of revenue in the last quarter probably would have been due to pent-up demand and lowering of fuel cost using these engines could be one of those reasons. And the third thing which I want to say is that our replacement rate of aircraft has been pretty constant. So we are not buying aircrafts in a frenzy. We are replacing our older aircrafts with newer fuel efficient ones, which has a higher reliability and higher operational times. So this has actually resulted in our revenues going up.
I would like to bring to notice to the board an underlying issue with the model itself. The model that we're following
strategy
is the sale and leaseback model, wherein we sell and leaseback agreements for our planes. So after that, when our lessor takes back the planes, we free up the airline to induct the new brand at an additional cost. So one underlying issue with our sale and leaseback model is the future depreciation value, which we might not be able to take advantage of. So because of the COVID and because of the lowering demand of air traffic, there has been a considerable decrease in the prices of airlines. But since we are operating on a sale and leaseback model, any future depreciation in the value of the property is no longer available to the buyer, that is us. And also it could have detrimental tax implications. Since the property has been owned for a long period, the tax implications would not be in line with the actual market value of the product. And right now with COVID and with the lowering of demand, the tax that you're paying right now might not be in tune with what the other players are paying. And this could be a reason why we alone, though we are a market leader, are facing a reduction in the what the customers are feeling about our airline and our model. And as a short-term solution, maybe we could control the capital expenditure. We could reduce, postpone, or cancel large investments and capital projects. We could negotiate special concessions with the governments and our valued partners going ahead. We could also evaluate all the potential funding resources and see ways in which we can inject liquidity and raise cash on a short-term basis. We should also learn to operate in an uncertain business environment by trying to leverage into new markets like the air cargo market, which has been told in our presentation itself, and diversify operations and explore new avenues to raise revenues.
So now I would like to continue. Like currently, the problem is that the stock prices are down. So this is the sentiment of the people being reflected. So one of the sentiments is that because of this new COVID wave, what can happen is that people might lose revenue, lose income. So what might happen is that they might not be investing in those stocks. So this is one of the external factors. Other than that, Indigo's company-related factor would be that in the aviation industry, the future is a little uncertain. So what is important at this time is communicating properly to stakeholders and communicating to the employees as well, because employees form a major cost of the airlines, and the skilled talent is limited, and by losing the skilled talent because of improper communication, the airlines will be majorly impacted. So what Indigo can do is that they can form employee friendly policies, like whatever roles are not customer facing roles and back-end IT supporting roles, they can provide employees with a remote working environment, and for those employees who are facing the customers, they can properly provide the PPE kits and everything so that the employees feel safe. And in terms of they can also provide leave without pay facility for if in case the demand crashes and the revenues are limited.
Just to highlight
I want to use a two-pronged strategy where they can increase their opportunities. Second is the cost-cutting measures. For increase their opportunities areas, still there is a sizable middle-class market still they can tap on, where they can provide incentives or any marketing campaigns for the short-term prospects. For long-term prospects, they can renegotiate contracts with the Airbus, since they have a unique leasing model.
So, guys,
it will be beneficial for them.
So, I think we have maybe 2 minutes left. So, let's
with the fuel management.
Yeah, so like, I agree with you.
So
we
what
have
I
like
was
the fuel management.
trying to highlight was, thank you so much. What I was trying to highlight was, Anish spoke about the cash crunch. I think I would like to highlight that we have already worked really well in the last 6 months on cash crunch and reduced it by 50%. Speaking about short-term and long-term remedies available to us, I think first of all, we should focus on the increase in fuel prices, and we can try and hedge the increase in fuel prices so that we're not impacted later in the future because of increasing prices. The same thing can be leveraged from the initiative which Southwest had taken way back in 1990s when fuel prices were skyrocketing. Secondly, our recommendation could be Indigo is the only airline right now making profits, and because they do have a certain amount of margin in profits available to them, they can experiment by reducing their flight prices and capturing increased market share, which is being taken away by Go Air and new entrants like Akasa and Air India.
And just to augment that, Geetika, sorry to cut you off here, but we are running out of time. But we can also, what we can potentially look at in the short term is letting go of the loss-making or tier 2 to 3 routes like Leh Ladakh, which have seasonal demands. So these are something that can be let go of in the short run.
Yes, Siddhant, one more thing that we are not facing a problem of profitability because we are having good results, but we are facing a problem of perception right now. So, so extensive campaigning regarding the efficiencies of Indigo. And for example, we can we can reach out to our investors by saying that we have a very strong cash flow. And also, if you look at our employee per aircraft, number of employees, we have the lowest in the industry, that is at 96. And put things into perspective, players like Jet and Air India, they had something in the range of 250s. So these efficiencies, operational efficiencies, can be marketed, can be properly communicated to our investors to arouse confidence in them, so that they would invest in our stocks. And I propose some confidence building measures like maybe an investor meet or maybe proper advertising on different platforms to actually solve this problem of our stock price tanking.
Yeah, our press conference.
Yeah. Thank you, guys. Thanks a lot for the discussion. So now we'll be moving on to having a closing statement by each team one by one, and you can take up 1 minute to summarize your arguments. So team strategy Schmoops, you can start with your statements.
Right. So after a fruitful discussion with the board, I, as a board member, definitely feel that we need to communicate our efficiencies, and we need to communicate to our stakeholders, our investors, make sure we instill confidence within them. We need to clearly lay out our short-term and long-term strategies that have been discussed extensively in the meet. We also need to make sure that we're not very much impacted by global factors like rising fuel prices, or generally what's happening in the stock market across the globe with FPIs pulling out. So what we need to essentially make sure is a boundary spanning activity. We need to make sure that we are insulated to these shocks, and first and foremost, we need to instill that confidence that yes, though our debt is high, we are a good cash flow rich company, our profitability is high, we are the market leader, and Indigo will breach the 2300 mark that has been there for our stock for the past 5 years. Yes, we need to make sure that we clearly indicate that our target is 2500, and we are going to get there.
Your time's up. All right. Thank you, Team Strategist Moves. Team Vans Club, you can go next.
Yeah, like as we had a board discussion regarding that, so we are all agreed on many points. The first is where we can do in two stages. One is short-term plan and one is a long-term plan. In the short-term plan, we need to communicate our investors and give confidence them by providing our business opportunities in the long term, like how we are going to achieve it, and still how we are the largest and better aircraft operator in the market. And for the long term, where we can hedge the fuel management prices and also look into the alternate fuels where the optimal mix can be done. And the next is the leasing cost, where we can have a effective purchasing contracts and renegotiation with the other aircraft manufacturers. And also we can look at the on-time performance and load factor, and we can show all these things in a detailed presentation to our investors so that they can provide trust and bring back our to the tables. Thanks.
Thank you. Team Tachyons, you can go next.
So yes, we had a very fruitful discussion. So the major concerns for the Indigo moving forward would be that they have to be operationally efficient and reduce cost so that they can provide, and also they have to improve their products constantly and keep an eye on the safety of the passengers and improve the communication for investors. So for the investors, they should keep communicating that their operational efficiency is getting better and what all initiatives they are taking for such things. And also like small issues like baggage handling and all, there are some concerns most of the airlines, so they can keep improving on those factors using technology, and they can use technology to reduce the fuel cost, and also they can use hedging strategies to reduce their fuel cost. I think that's.
Thank you, Team Tachyons. Team Intrepid, you are next.
Yes, so the problem which was highlighted in this question was that our stock prices are decreasing, are falling. Actually, it has fallen by 25%, and the major reasons could be perception issues for the airline industry as a whole, and with the advent of newer, more competitive competitors like Tata Air India, then Akasa Air, which is going to come up. Jet Airways probably will start their operations pretty soon. So in this scenario, I think we have to communicate more to our more to our stakeholders through shareholder meets or through business news channels like CNBC and all about how strong our cash flow is and how we are going to expand in the near future, and also about our fuel efficiency, which has increased by 16%, thereby reducing costs. And also about our operational efficiencies, like the lowest number of employees which we have per flight. So these operational efficiencies will arouse investor confidence, and proper advertising and proper communication strategy should be in place to ensure that we are able to get these investors back to our foray. That's all.
Thank you, team. Team Sagacity, you are next.
Thank you both for the discussion and all the suggestions provided. I think firstly, as part of the press release and to augment perception of our shareholders and the market sentiments, we need to introduce Mr. Rahul Bhatia as the new MD of Indigo and assure his long-lasting partnership with Indigo is going to go a long way for us as a company. As part of the short-term initiatives and fluctuation of our stock prices, we need to assure the market that This is owing to the geopolitical tensions of fuel prices, which is going to be taken care by us via the hedging strategy we are planning to adopt. And secondly, because of the temporary pause of operations and flights by the government, there had been an impact on operations, which now is being receded by positivity of the third wave. As part of long-term strategy, I think we need to bring into the limelight the cargo line of business of ours, where we are trying to pitch into the freight market as well. And secondly, we need to also tell the market about the long-term strategy of how we are battling the
Thank
new.
you, team. Your time. Yeah. Thank you, team. Your time is up. So, Team Rising Saviors, you are up next.
So after a discussion with the board, we came to know of the consequences, the short-term measures as well as the long-term measures that we should take. So as far as the consequences are concerned, we will be facing a reduction in the employment because qualified employment in the form of pilots and staff will start looking at other profitable airlines for their jobs. And there will also be a considerable increase in the fall of mergers and acquisition deals that we had lined up. So in order to tie it across these tough times, we should look at some short-term measures. Hedging is something that we do already, so we need to push for better deals in light of the weakening demand. And clearly, this is a case of lack of communication from the board. Even though we are having profits, we are not able to reflect that in terms of investor sentiments. So we need to get hold of someone in a CEO or a C-level executive position who has the investors in mind while leading the company. And as far as the long-term goals are concerned, we need to look inside and look at our models. The model that we.
Thank you, team. Yeah, your time is up. Well, those were some interesting closing remarks, and that marks the end of our discussion round. Now, I would like to invite our judges, Shekhar and Sajal, to question the teams.
Okay, so Saksham, do we need to question the teams individually, or can it be a blanket question to the board and anybody feels free to answer? How shall we go about it?
Yes.
You can use mix of both, Shekhar, that's fine.
Yeah, you can either ask pointed questions or it can be an open question to the board and anybody can pick up the question.
Okay, so actually I have two questions over here. And the second question stems from the first one itself. There are a lot of problems everybody is alluding to in this entire scheme of things, that why are we seeing a drop in the market price of the shares of Indigo. But what I'm not clear is that, I mean, according to you, what are like the top, you can say, one or two factors that are more critical than the other ones? According to me, what I'm hearing right now, it appears that all the problems are at the same level. So everybody's trying to do a blanket addressal of these problems. I need some kind of a prioritization, like what are the top two problems, let's say, we should focus on. And accordingly, the question number two will be, what are the solutions we should go after when it comes to the prioritization? Yeah. So feel free to answer, anybody who likes to take it up.
So if may I take that question? May I take that question?
Sure, go ahead.
Sure. So top two problems with this fall of stock price. One is trust issue. That needs to be addressed, and with the advent of COVID, we are not sure that COVID, that even though the third wave has receded, that COVID is gone, and there may be further lockdowns. So we need to get investor confidence in this by using other means. For example, Indigo has a very strong cash flow. Indigo has the highest market share. Indigo is actually one of those airlines which is actually showing profit over the past few years. We have to communicate this very well to the investors, both to institutional investors and to retail investors, so that we can get them back. The second problem would be rise of competitors. So with the closing down of Jet Airways till I think 2019-20, Indigo was a major player in the market, with SpiceJet having around 15% of share. So in that case, it was enjoying more of an oligopoly. But right now, with Tata Group coming in, the perception is that if people are investing in something like an Air India, which in a Tata Group or Tata Group shares, probably that would be a more fruitful proposition for the investors. So we have to communicate that we are the best compared to any of these players. So I think communication is a key, and these two major problems need to be addressed before moving into any other problems.
And just to add to Shovik as a part of the board, so we know that the perceived value of a share for an investor depends on two major critical things. One is the uncertainty and the commitment that the investor is willing to take. So these are the 2 points, soft points, where we need to target our communication to the investors. And yes, as already highlighted, we just need to communicate our value proposition in a more strong manner.
I am not very clear. What do you mean by uncertainty and commitment?
So yes, sir. So sir, if we draw a framework of 2 axes, then the y-axis is definitely uncertainty. Like the higher the uncertainty is, the higher is the risk that is assumed by the investor, and therefore the higher the return that they demand. Versus if we look at the commitment, then the other side that the investors think of is how long do I need to be committed to this share. So if I'm investing for the long term, I am a more loyal investor, and I am more likely to stay invested. So if we minimize the uncertainty by showing our strengths and attract investors for the long-term commitment, that is how we can maximize our share price, is what we are proposing.
Yeah, to add on that, to show more commitment, like we have to chart on our business plan, like how we can increase revenue through multiple channels. Since our main revenue is through the airline operation, but we can also look into how other platforms like the inboard services, extra services, and apart from that, cost management also we can look at upon for the privatization, so that since we have a 50% market share, and how we can still make it more lean rather than actual, like using technological advances like tools by predicting the forecasting members.
Not just that, I believe to show long-term commitment, we can also experiment with the reduction in flight prices, because right now, the most important thing for us is to ensure that we retain the market share of 53% that we hold, or over and above that, we increase it. And that can be done only if we try and target how we are going to battle out the new entrants into the market, which is Akasa and privatization of Air India. So for that, I think we need to assure our customers by reducing prices and see how the market sentiments are going to change with the fluctuation of that.
But I mean, if you reduce the prices, I mean, how it's going to instill confidence in your investors, because they're going to see a dip in your bottom line the moment you reduce the prices. So how is going to instill the confidence?
I mean, we are still trying to offer more frequent flights and to the busiest of routes. I think what we can then do is reduce prices only to ensure that, you know, we are trying to capture the customer sentiments of disruption caused due to COVID-19, and looking at the market conditions, we are still trying to cater to the customer sentiments.
We can reduce price not drastically but minimally, but by increasing the utilization rate of the total flights by combining 2 or 3 destinations in one flight area, so that the price can be reduced. That is one of the possible way where the fuel cost can be more economized, because if we have a Chennai to direct Delhi, we can have it a Chennai to Mumbai, Mumbai to Delhi, so that utilization will be more, and also the price can be reduced for those flights, and people will be also be more attracted to that if 1 or 2 hour journeys more.
So our understanding is basically that this price will be a function of what kind of return an investor can get, and given that new competitors are entering, so this is uncertain, and because Indigo is already a market leader, so how far it can grow and what new things it can bring to the table is of concern. So majorly communication is the key, that what kind of operational efficiencies they are bringing, and what more they are planning, and for short-term basis and long-term basis. So for long-term basis, they have to keep adding the capacity. So currently what they are doing is that they are trying to cap the capacity right now till 2023, and after that, given the market situation, they are trying to increase the fleet size. They already have that order book, but they are not accepting deliveries. So they have to communicate this to their investors, so their long-term goals, and how they are planning to reduce the costs. Majorly, they should not disturb the revenues. They should not disturb the pricing side, because already the customers are price sensitive, and any increase in price would decrease the demand, and decrease in price would affect the airline directly. Yeah.
Just 1 more minute left for this question.
So I think what my board members are trying to say is that by reducing the price within acceptable limits, we are going to increase Indigo's brand recall amongst the middle class retail customers, and probably that would lead to them investing in our stocks if it is possible. So I think that idea can be tried as a pilot project, but majorly it should be about communicating to our shareholders through different media.
So as Vishwanath told, we shouldn't be meddling with the prices, because increasing the prices could decrease the demand, and reducing the prices could impact the investor sentiments. So we could try renegotiating all the hedging contracts that we already have in place, because in light of the weakening demand, we could push for better deals as far as airline fuels are concerned. And considering that airline fuels, go for about 40% of our. Thank you.
Thank you, teams, for this question. Yeah, Shekhar or Sajal, I mean, you can take.
Can I?
Next
Yeah,
question.
I'll just go next. I have 2 questions, and this is for the whole set of teams, and people can choose to answer in priority as they deem fit. So the first question is, how will you stem the immediate crisis in terms of a loss of confidence among employees and internal stakeholders? Okay, I'll repeat it once again. How will you stem immediate crisis in terms of a loss of confidence among employees and internal stakeholders? I'll put both my questions and then people can sort of react. Is that fair, or you want to first do this and then the next question?
So both questions at once may be better for us.
Okay. And the second question is, in order of priority, please detail 3 steps that you would recommend the company do to ensure medium to long-term growth and market value creation. I'll repeat that again. In order of priority, can you please detail 3 steps that you would recommend the company do to ensure medium to long-term growth and market value creation?
Just before you start answering this, I would request you to be concise with your answer so that everybody can get it. Thank you.
So, thank you, sir, for your questions. To take up the first question, I think to instill confidence in employees and stakeholders, first and foremost, like we mentioned, we need to introduce a new MD to the employees, and also let them know that whatever government policies and government initiatives are actually taken were the reason of fluctuation in stock prices and nothing to do with hindrance with our operations. And to take up your second question, in terms of priority, the 3 initiatives we should take is, first and foremost, fuel pricing hedging. Secondly, we need to introduce the cargo line of business and tell them in which products we are going to deal, which sectors and routes we are going to deal with to increase our revenue stream. And thirdly would be introduction of AI in our processes. So we can think about automating the entire check-in luggage, the entire automation of check-in luggage, where there is no manual intervention at all. And there are kiosks built by Indigo to provide automation of check-in luggages along with tags. So these are the 3 priorities as part of our long-term strategy.
So I think about gaining investor confidence in the shorter term. So communication would be the key, because both for investors and for internal employees, communicating them about our strong area and a very fuel efficient fleet. We have to communicate that, and about the 3 ways in which we can increase we can communicate to our shareholders. First would be about which Geetika just now said about the hedging contracts. We have to ensure that we are spot on over there. Second would be having investor meets and advertising through channels like CNBC and Business Today about how efficiently we are doing. So probably a few articles in those newspapers like Business Line or maybe an Economic Times can actually raise investor confidence. And thirdly, about our SLB model. So in sale lease back, we are taking aircrafts in the tune of 500 aircrafts in the next 5 years. And those are highly fuel efficient aircraft. So to ensure, and the airline industry is going to see a pent up demand in the next few years post COVID. So we can leverage that aspect as well to ensure that that our investors get the news that we are into this type of business as well, so that they would invest more in our stocks.
So to answer your first question, one way to reinstill the confidence back in our internal stakeholders is to communicate properly and make sure that our profit numbers have reached all the years of our internal investors. And as Vidika told, if we can get hold of someone who has the investors in mind while leading the company, that will be a well and good move. And also to answer your second question, to control prices, we can renegotiate hedging contracts in light of the weakening demand. I think we can push for better deals. And also another way is to get special concessions from the government and to diversify operations in terms of exploring new lines like cargo operations as well. And as a long-term measure, I think we should look inside and reevaluate if SLB model, sales and leaseback model, is something that we need to go ahead with, because we are not able to get advantage of the depreciation value of the products. So any future depreciation in the value of the property is no longer available to us, and it could have detrimental tax implications wherein we will be paying more than what our competitors are paying at the same price.
For the first question, I think communication, as many of us are told, that it will be the key. But what we have to communicate is like how we are going to look into the long-term prospects and how good is our business plan and how we are going to neutralize the threats. If we are able to elaborate it properly to the communication to the investors, it will directly gain the trust and increase our loyal customer base in the investor. For the medium to long term, first is the hedging of contracts, many of the sort, but it is not long-term perspective. But we can also initiate a R&D within the company where we can looking for the more efficient fuel engines and also an optimal mix similar to ethanol plus petrol, which we use in general automobile industry. And apart from this, like we can also look into the we can also initiate a cost cutting drive across the firm, where we can look into multiple factors, where since it is a more of a vertical integrated company, we can look into how we can make it lean by getting into more consultants who have prior experience in other aircraft industry in other countries, so that we'll be able to get new insights in those areas and we can implement in a 5 to 10 year horizon. And apart from this, we can also look into the using of technological advances, where we can forecast properly and have the better utilization rate by having a milk run logistic kind of setup, where we can have 2 to 3 destinations combined, so that the total cost of the flight travel will be reduced and the utilization rate will be increased and the prices will also be decreased, which will be beneficial for the customer.
Right. So again, just to add on to whatever has been already been said by the board, for the internal stakeholders, we need to communicate our goals and aspirations in terms of numbers and in terms of timeline very clearly. We can get into contracts with our employees that we're not going to lay them off. We can hold town halls and open door policies as a part of our general organization structure, where the employees can raise their concerns towards the top management or middle management, maybe depending upon their interaction and their comfort. We can also look forward at strategic partnerships with, let's say, the government for negotiating favorable policies for the aviation sector as a whole. So those are things in terms of stakeholders. And in terms of prioritization of value creation metrics, the first is definitely developing an ecosystem for a definitive customer experiences and playing on our strengths. Second is, again, establishing technological superiority and leveraging the data and the technology and the AI ML methods that have been coming up. And the third is definitely reducing fuel dependency on traditional sources, traditional geographies, and therefore having more capacity to absorb external shocks. Yeah.
So yeah, for employees,
just last 2 minutes to discuss the question.
For employees, what we can do is that we can properly form safety protocols, and as much as possible, we can automate the processes like baggage handling, so that employees do not come directly in contact with more and more people, so that they feel safe. And another thing is that they should communicate that the first line of defense would be pay cut and not layoff, so that employees are certain about their future. That is for employees. And for internal stakeholders, the communication is the key, and what long-term strategies company is taking, and operational efficiencies that should be communicated. And in terms of long-term and medium and long-term growth and market penetration, we can certainly look at increasing the number of routes and penetration to the tier 2 and tier 3 cities, because these are the new growth avenues. And then in terms of increasing getting the revenue from ancillary sources. So they should charge for, they should create new products and they should charge for those products, and new internet facilities on board, and like recommendations of software, etc. So this would be the key. And third would be decreasing the debt by planning for the future in terms of fuel cost and all, and then exploring that lease back model, sales and lease back model. So they should continue to bring in efficiency in that.
So I would just like to add one small point to the first question. That is, I think we missed in this discussion. That is about ESOPs. So we could offer ESOPs to our internal employees and get them onboarded from being employees to internal stakeholders as well within our equity. So this is something we can do. That's all.
Thank you, teams. Thanks a lot. So with this, now I would like to mark the end of Olympus Boardroom Final Simulation Challenge. And I would like to wish the teams all the very best. Now, I would like to request judges to move to the breakout room for the final decision so that the decisions can come.
Saksham, one question.
Yes.
Are there any, will we be joining back the room as judges, or because I was having a couple of pointers I wanted to share with the teams, which they can keep in mind for future?
Yes, Shekhar. Once we have the results out, then we can have a discussion around feedback.
Sure.
We have balance.
Yeah.
So guys, this is regarding the feedback on the entire process. If there is anything you want to share about your experience on the event, now would be the time to do it.
Yes, good, Simran. It was a great learning experience for us. So we did a lot of research on Indigo and learned about the industry. And this boardroom simulation is something probably we are doing for the second time post joining a B school. So it's a great experience for us as well. Thank you.
Yeah, the quality of discussions are pretty great. So you could tell that you've done your research.
Yeah, thank you.
Also, guys, Anik has put up a link on the chat. So this is basically the voting link on D2C. So I think SPJMR is one of the B schools on the list of colleges for the most. Hold on a second. Can you hear me?
Yes, we can.
You are fairly audible.
Yeah, okay. Yeah, so SPJMR is on the list for the most prestigious B school festivals. And if you thought you enjoyed this event, please go ahead and vote there. And if there's any other sort of feedback or experience you want to share, please do so.
All right. Just a second. Yeah. So I hope everybody had a great time today, and we are finally at the last stage where the most awaited part. So the results of what's gonna happen next. So firstly, before announcing results, we would like to, congratulate all the participants for making it to the national finals of Olympus Boardroom Challenge. We know it was one hell of a journey going through multiple rounds, multiple stages, and fighting the brightest talent from all across the country. I congratulate all of you. And it does not matter whoever wins today and whoever's not. It is a great learning opportunity for all of us. So I would like to start by announcing the runners up for the day today. So any comments? So what's your guesses, team? So let's flood the chat. So who do you think is the runner up? Any guesses? Anybody would like to say? I think nobody wants to become the runners up themselves. Anyhow, so the runners up for the day is Team Strategy Schmoops from IIM Bangalore. Congratulations, teams. Now it's the time for the winners. So let's see. So any guesses here on the winner side, or all only just fingers crossed and prayers going out in your brains? All right. So the winners for Olympus Boardroom Challenge today is Team Sagacity from IIM Kozhikode. Congratulations, teams. You did really well.
Thank you, guys. Thanks a lot. It's a great opportunity, I would say. Things are conducted in fair and transparent manner, and we like the competition in general. Pretty overwhelmed, obviously, but again, it's a good competition, and it was pretty interactive as well. Thanks a lot, guys, and thanks for the judges to have such a conversation.
So we would like to invite judges now to share their feedback with the teams. Shikar and
Yeah, so thanks guys for having me, first of all. I think it was well managed, so kudos to the organizing team. And I think teams, so boardroom conversations can actually become very ad hoc and very passionate sometimes. So I think that came through. Levels of engagement were high quality. One thing I would like to comment on is impressed with the quality of research of the teams. Fair bit of number crunching that's been done in the background. Usually, B-School contests tend to be very high level and superficial. So I think would definitely comment the research that's been done for making a fairly cogent argument. So that's basically two things. And as Saksham also mentioned, no winners really. I think it's really an experience that you guys are taking, because life, as you go in your start off in your corporate careers, stuff like this will actually help. And I trust me, I say this with experience. These are skill sets that help building right now, because as you go into this thing, it becomes second nature for you guys. So when you are engaged in a boardroom conversation, or even a corporate conversation, data can become a very important friend, because with data you actually take out the emotion out of the equation, which makes for more cogent arguments and therefore winnable arguments. So to that extent, I think commendations to the team, to the teams, and yeah, I think it was a good experience for me as well. Thanks so much.
Okay, I'll just go next. So firstly, I think the OJAS 14 team has done a very good job in pulling this event off. Understand it's one of a kind event which hasn't been done in past, and I think I really appreciate the thought process behind the entire design and the orchestration behind this event. Now I think a couple of pointers I was having after going through all the presentations as well as the final boardroom discussion that we had. So broadly would like to classify the suggestion along three lines. First is around the pitch which you are giving, which was like more on the first round, I would say. So I felt that the storylining was kind of missing in the pitch. I could see people moving back and forth between the problem, the solution, and then thinking, okay, there is another problem which was there, and hence this is the solution. So ideally, what you should do is just set up the context first. Then you define the problem first. Okay, this is the context. Under this context, this is the problem which is happening. Therefore, these are my recommendations for the solutions, so that it is easier for the person to absorb the information. It is not just about a supply side thing that, okay, you have done your research, you know the answers. You should also focus upon whether the person who is on the opposite side is registering your solutions or not. Are you being coherent enough while delivering that information? So I think you should keep you can say you should be mindful of that. And it's not just about the competition. It could be like any presentation you are doing on campus or maybe later on in a corporate setup. So just think about that. So I think that was the first thing. When it comes to pitch, I would suggest that two things. There were people I felt who are like in a rush, like they just want to give all the information out there in the world about Indigo, about the airline industry, about the challenges it is facing. So if you feel that the time you are having is limited, then prioritize the areas you would like to focus upon. And it's okay to leave out some areas. It's actually, I would highly recommend that you don't cover everything. Focus on something, one or two, or maybe even three key things you are very passionate about. Okay, these are the problems, the top problems that need to be addressed. And then you can say, put them at the center of your pitch. You should at least stand for something. People who vouch for everything, don't stand for anything, and nobody remembers such people or their pitches. So stand for something. I actually, I think it was Team Intrepids, right? So what I really liked about them in the second round was that they stood for communication, like changing the perception, clarifying the perception. I know that point was being called out by almost all the teams, but I think that was one team that firmly stood for that idea that we should communicate. So that was something that really you can say struck a chord with me, and I instantaneously develop an association. Okay, communication, Team Intrepids. So this is how your brain works. You stand for something, then you end up making an association with that thing, and that's how people remember you. So don't just go around and loosely coining out terms like, okay, we will do AI, we will do crypto, we will do blockchain, we will do XYZ, 100 of things. Just stick to 2-3 things and then make a compelling argument around that, so that your pitch is immediately registered, right? Have some prioritization. And when you are okay, so that was like around storyline and pitching. I think that was there. Okay, one more point over there. It's a very, I would say, a softer aspect. Couple of phrases that we unconsciously use in our pitches, like too many
So,
times.
Shekhar, I'm sorry, I'm having to cut you off. Sorry. I will have to drop off, guys. This has been a very engaging session. Thanks so much for having me. Shekhar, please continue. I just have to drop off. Yeah.
Sure, Sajal. Thank you.
Thank you, guys. Thank you so much.
Thank you, Sajal. Thank you for being a part of OJAS 14.
Thanks so much. Likewise.
Thanks for your time.
Yeah. So on my first bucket, which is storyline and pitching, just I would say last pointer on that. Some informal phrases that we use in our pitch, like, okay, so many a times it distracts the listener from your key point, right? It breaks the flow. So be mindful of that. Try to practice your pitch multiple times before you are delivering it, so that you don't end up using these phrases, right? And also sometimes, I think one of the person was referring Indigo as Lenovo. So please don't make that mistake in a corporate setup. Never use another company's name in your pitch. Okay. Be mindful of the terms you are using while delivering a presentation. So that was like my first bucket, storyline and pitching. The second bucket, which is around solutioning. So when you are delivering a solution, again, you should have a prioritization in mind. Okay, which solution is going to address 80% of my problem? I will speak about that solution first, or those 1 or 2 solutions first. And maybe even limit your solutioning to only those solutions if the time is limited, right? And even if you are using these cool terms like AI, ML, blockchain and everything, at least give the rationale that how they will work. I just felt that people are randomly saying we will use technology, we will use AI, we will use digitization, but how? How will you implement it? That was not very clear. We should have a very tactical rationale. Okay, this is what I'm proposing and this is how it's going to work, right? So this was bucket number 2. The last bucket is about stress testing or tying back your solutions with your original business model. You might say, okay, we need to expand in a long haul kind of a segment. Let's even tap into the business segment. Let's even tap into the cargo segment. But is it actually tying back to your business model, what your core identity is? If it is deviating you from your core business model, you should not do it. Indigo is you can say a force to reckon with in an airline industry because it stood for something. If you're going to dilute that by putting all the features on board, then again, it's going to lose its essence. So I think those were the 3 key areas I would want you guys to be watchful of going forward. And it's not just about the competition. It's about any problem you address, any case you work on in future. All right. So I think that's all on my side.
Thank you so much, Sajal, for those kind words. And I think that was quite an elaborate feedback.
Not Sajal. You're making the same mistake. Confusing the brands.
Sorry. Yeah, Shekhar. So that was an elaborate feedback, and I hope everybody can gain something from it. So I think we are done for the day, and I would just like to request you, Shekhar, to wait and participants so that we can clip a picture, and rest everybody can drop off. And thank you so much, everybody, for joining us on a Sunday morning at 10 a.m. and making this event a grand success. Thanks a lot, everyone, for being a part of OJAS 14. Have a good day. Enjoy your weekend.
So I request the winning teams and Shekhar to stay back for the picture.
Sure.
So guys, please turn on your cameras. We'll quickly take a picture and then we'll close the event. Okay.
Sorry, just allow us 10 seconds. Our one of the team members is traveling. We'll just call him.
Okay, sure.
In the meantime, if any participants would like to say anything.
Well, Shekhar, your concluding inputs were really insightful, no doubts about it. I have seen it was in one of our initial case com that we have done together as a team as well. So there were certain things to learn from it, and of course, I understood when you talked about the cargo fiasco, like we should not have gone over that direction, and to talk about certain points and to stick with whatever you think about and whatever you stand for in that point of view, and to actually communicate. That was a great insight, I feel, and we will try to incorporate in other further competitions as well. Congratulations to the organizers as well, since of course it was a good competition overall through and through. I guess that's it.
And I hope you guys would be extra happy. So you had that concern as well regarding the presentation by other teams. Hope you are not disheartened.
No, we're glad it was very transparent and a fair process. But yeah, I mean, at that time we were a little too disheartened because of the entire incident, but that's completely all right. I'm sure the presentation and competition prevails.
Yeah, sorry guys to keep you waiting. Actually, I'm traveling and I was presenting in between, and then I was a little cut off because due to internet issues. Yeah.
Sure, no worries. I think we can take the pictures now. Yeah, I think we are done. So thank you everyone. Thanks a lot for being a part of here today. So I think Shekhar can drop off and we can collect the details of the winning team today.
Right.
Sure. Thank you.
Thank you
guys.
again
All
for
the
being a
best.
part
All
of
right.
OJAS 14.
Thank you, Shekhar.
Shekhar.
Thanks a lot
Thank
for
you.
sparing so much time with us. Have a good day.
Okay, for the winning teams, guys, there will be a form which will be on the chat right now. I request you all to fill it with your details so that we can, send you all your awards, rewards, prizes, call it what you may. Just a second, just getting somebody from logistics to put it up. Right, yeah. Yeah, can everybody access the form? Right, okay, yeah.
Yeah.
Please go ahead and fill it.
Just a confirmation team, both the team members have to fill it, or only one would do?
Just one for team would do.
If you guys are done with the form, we will officially be closing the event. So just let me know, has Team Sagacity filled the form? Anybody from Team Sagacity? Let me know if you filled the form.
Yes. Just a moment. Yeah, I'm almost done.
All right. And strategy note?
We are on it.
All right. No worries.
Yeah, it's done for our team. Will you be posting the results on your socials also?
Yes, the OJAS team will be updating it soon.
On LinkedIn or?
Yeah, I will confirm. We'll put it up on the WhatsApp group, right? All other details.
Sure. Yeah.
Right, teams, I think you all can drop off. Thank you. Thanks a lot for being a part of OJAS, and congratulations, everyone.
Yeah, have a wonderful day, guys. Thank you.
Thank you, guys. Bye-bye.
Thank you, guys. Bye-bye.
Yeah, it's just the four of us.
भाई, so remove क्या साले को भाग ही नहीं रहा था ये recording